What if you could become a real estate investor in America without buying a house, taking a loan, or dealing with tenants? Sounds impossible, right? But in 2026, millions of Americans are quietly building wealth through a real estate strategy most beginners have never even heard of. They're doing it through something called REITs, and today I'm going to explain how they work, why they're so powerful, and how they can make you rich over time, even if you're starting small. This is Finance Builder. Let's break it down. What if someone told you you don't need credit, you don't need $50,000, you don't need to fix toilets at 11 p.m. You can own parts of America's biggest real estate properties starting with $10. Most people wouldn't believe it, but that's exactly how REITs work. So, what is a REIT? A REIT, a real estate investment trust, is basically a company that owns income-producing real estate. Think of apartment buildings, hotels, hospitals, data centers, office towers, storage units, shopping malls, industrial warehouses, even cell towers. These companies allow everyday investors like you and me to buy shares in huge real estate portfolios. You're not buying a building, you're buying a piece of a building. Just like buying a stock gives you ownership in a company, buying a REIT gives you ownership in real estate. Why REITs even exist? Back in 1960, the U.S. government created REITs to give normal people access to real estate wealth, not just corporations and millionaires. But here's the interesting part most people don't know. REITs are legally required to pay out at least 90% of their profits to investors. That means you get the cash flow every quarter like clockwork. This is why REITs are one of the highest passive income generators in the entire stock market. How REITs actually make you money? REITs have three wealth-building engines. 1. Dividend, the income. Because REITs must distribute profits, investors get paid from rent collected, property leases, commercial contracts, facility operations. This is your passive income. Some REITs pay 3 to 5%, some pay 10%, some even pay higher depending on the type. Appreciation, the growth. As the value of the properties rises, the value of your REIT shares rises. It's like owning a rental property without owning one. Reinvestment, the wealth building. If you reinvest your dividends, your money grows exponentially. This is where long-term investors get rich, because dividends plus growth plus compounding equals unstoppable. Types of REITs. Which one actually makes you rich? Not all REITs are the same. Here are the major types with simple explanations. Equity REITs. They own physical properties. These are the safest and best for long-term investors. Mortgage REITs, or MREITs. They invest in mortgages and loans. These have high dividends but higher risk. Hybrid REITs, a mix of both. Specialized REITs. These can be extremely profitable. Data centers, AI boom. Cell towers, 5G growth. Warehouses, Amazon, e-commerce. Storage units, recession-proof. Medical facilities, aging America. In 2026, these specialized REITs are expected to explode. Why REITs are perfect for beginners? If you're new to real estate, REITs are honestly the best starting point, and here's why. You don't need huge money. Start with $10 to $100. No credit score needed, no mortgages, no loans. Zero management, no tenants, no repairs, no headaches. Instant diversification. One REIT can own 200 to 300 properties across America. Highly liquid. You can buy and sell shares anytime, just like a stock. Passive income from day one. You get paid regularly without doing anything. Historically strong returns. REITs have outperformed most stocks over 30 years. Examples of popular REITs in America. Not recommendations, just examples many Americans use. VNQ, Total Real Estate Index. O, Realty Income, pays monthly dividends. PLD, Prologis, owns logistics warehouses. AMT, American Tower, Cell Tower REIT. Welltower, Senior Living and Healthcare. DLR, Digital Realty, Data Centers. These are giants in the real estate world. How to invest in REITs. Step-by-step beginner guide. Step 1. Open an investing account. You can use Robinhood, Fidelity, Charles Schwab, Vanguard, or Webull. Create your account. It's free. Step 2. Search for REITs. Type in REIT or VNQ, O, PLD, AMT, DLR. You'll find dozens of options. Step 3. Start with small amounts. Most beginners start with $50 to $200 per month. This builds long-term wealth without pressure. Step 4. Reinvest the dividends. Turn on DRIP, Dividend Reinvestment Plan. This is where compounding takes off. Step 5. Stay consistent. Real estate grows slowly but steadily. REITs reward patience. Will REITs make you rich? Here's the truth. REITs won't make you rich overnight, but they can absolutely make you rich over time. Here's an example. If you invest $150 a month into REITs with an average 8% return, in 20 years, $82,000. In 30 years, $181,000. In 40 years, $407,000. And this isn't including dividend increases or compounding accelerations. This is simple math, not magic. Why 2026 is the best year to start? 3 major reasons. 1. Interest rates are stabilizing. Real estate becomes cheaper to finance. 2. Housing demand remains high. Americans still need apartments, warehouses, hospitals, and storage units. 3. AI and e-commerce are exploding. Data centers and industrial REITs are skyrocketing. 2026 is shaping up to be one of the strongest real estate growth years in the decade. The REIT wealth formula. Here's the simple formula the rich follow. Buy REITs, reinvest dividends, stay long-term, let cash flow and appreciation grow your wealth. That's it. And this single formula has helped millions of Americans build financial freedom. REITs are the easiest, safest entry into real estate and one of the most underrated paths to long-term wealth in America. Start small, stay consistent, let time and real estate do the heavy lifting. This is Finance Builder, simplifying real estate so you can build wealth the smart way.